I spent years studying ICT concepts, testing everything and refining my strategy until I finally figured it out. And after all that time, I realized that while many concepts work, two of them were complete game changers. These two principles are the reason I went from struggling to finally becoming a consistently profitable trader. In this video, I'm going to break them down step by step, show you exactly how they work, and most importantly, how you can start applying them today. And if you've ever found it difficult to identify these concepts, I've got something for you that will make your life easier. Stick with me until the end, because after I break down the concepts, I'll also go over two real trades I took using them so that you can see exactly in real time how I applied them in order to identify those A+ setups. Let's get into it. The first concept that I will talk about is liquidity. And to keep it simple, liquidity sits above highs or below lows, basically where many stop losses are placed. And we have two types of liquidity. We have buy-side liquidity and we have sell-side liquidity. For the buy-side liquidity example, we have a high right here. And what many traders usually do is they place a sell right below that high. They call it a resistance area, and they want to place the stop loss right above it, okay? And then they target whatever. So this right here is the buy side liquidity. And you will see that the market multiple times will tend to sweep that liquidity, okay? We have this buy side liquidity that the market will then take out, and afterwards the price will head lower. That's why it is very important to know where liquidity is sitting, because it will prepare yourself and it will basically keep you away from fake outs. And now for the sell side liquidity, we have a low where people will tend to long, okay? They will tend to long, calling it a support. They will tend to place the stop loss where below the low. Like I said, liquidity is sitting above highs and below lows. And what the market will do is will go ahead and will take out that liquidity, that sell side liquidity, okay? And then after it takes it out, it will then head to the upside, okay? We see this multiple times happening in the markets. Now, let me go over this chart here and show you some quick examples. So check this out, guys. Let me use the bar replay mode for this. Right here, okay, we have this price section. Many traders will call this area right here an area of support, and that is very correct. This indeed is an area of support. Now, most people will place their buy positions right here, okay, on top of this support, and stop loss right below it, which would be right here, okay? This would be their long position. Now, let's see what the market does. Check this out. Let's play the price. Boom. Check this out. The market stops everyone out, grabs the liquidity, okay? So right here, we have this sell side liquidity. The market grabs it, okay? We have a sweep of liquidity, and then check out what happens next. Price is now moving towards the upside in the right direction. But it only moved to the upside after it swept the liquidity. We need to understand that liquidity acts like gas for a car. For a car to move forward, it needs to have gas. It needs to have a stop, so to say, at a gas station to put in the gas, to fill in the tank, and then to move in the right direction. It's the same thing with liquidity as well. And now let me quickly show you a buy side example as well, guys. So check this out. I'm gonna use the bar replay once more. So right here, we can say that the market is downtrending. A lot of people will consider this an area of resistance, and therefore they will want to place a sell on it, stop loss above, and targeting the most recent lows. Okay, this is a pretty straightforward setup, but check what happens next, guys. Okay, we can play the price. Boom. Liquidity was swept right here. The buy side liquidity was taken out, and then what happens next after the stop at the gas station? The price then moves in the right direction and takes us lower to sweep what? The sell side liquidity. Okay, you can see how beautiful this looks and how clear it is that liquidity was taken out. Now that I showed you how to identify liquidity, I will go over the second concepts, and right after that I will also show you how you can easily identify them if you're still struggling with it, and also of course how I apply these concepts in order to make some beautiful profits. So the second concept is the fair value gap. A fair value gap is basically a price imbalance that forms when the market is aggressively moving in one direction. More specifically, a fair value gap is a 3 candlestick formation where, for a bullish example, let me show you guys, the top of the first candlestick, which in this case will be this one, isn't overlapping with the bottom of the third consecutive candle, okay? In this case, we can see they are not touching. So right here, we have a bullish fair value gap. And now for the bearish example, okay, the first candlestick of the formation, the low of it, okay, isn't overlapping with the top of the third consecutive candlestick. We can see that example right here, hence why right here we have a bearish fair value gap. Now, you might be asking, why are fair value gaps so important? Because you see, these gaps right here, the market has a tendency to always fill them. And not only this, when we see a fair value gap price moving impulsively to one or the other direction, it shows us that the market has the likelihood of continuing in that direction. A short analogy that I like to use when I was first testing fair value gaps, think of it as a train, right? Whenever you want to go to a different city with a train, you would ask yourself, okay, do I want to take the slowest train, or do I want to take the train that is fast and has the likelihood of getting me there faster? It's the exact same thing with fair value gaps. When price is impulsively moving to the downside, as we see it here, okay, we know that price could potentially retrace, okay, and then move even lower because it's showing us its hand. It's showing us that the market is impulsively moving to the downside, and that tells us that it's very likely for the market to continue lower. Now that I went over the two concepts, I will go over two real trades I took using these exact concepts. But before that, like I said, if you guys are still struggling with identifying them, I have a solution for you. Let me show you what I mean. I will enable this flux chart price action toolkit indicator that will basically show me not only the fair value gaps, but also the liquidity gaps. And I find this very helpful for people that just started using these concepts. And now I want to quickly show you the settings as well. Check this out. We have the fair value gaps enabled. We have the liquidity gaps enabled as well. The change of character as well. We're going to need that too. I will show you what I mean. And like I said, if you guys still struggle with them, this indicator is very helpful. And if you want to check them out, click the second link down below in my video description. Now, let me show you guys exactly how I took this trade. So here I was on the hourly time frame, and the first thing that I did is I marked my liquidity levels, okay? The buy side basically and the sell side liquidity, what we just discussed about. So in this case, the buy side liquidity was this high right here, okay? And the sell side liquidity was this valid low right here. Now, what I waited for next is a sweep of either the high or the low, basically of the buy side or the sell side liquidity. So let us play the price and see what happens next. Okay, check this out. The buy side liquidity was taken out. And now what I did next is I adjusted this to be the new valid low. Before I looked for a setup, I always like to look for a higher time frame confluence, basically to see whether the price is at a higher time frame level, either a fair value gap or a supply or demand. And in this case, we can see with the help of the flux charts indicator that we are at a 1 hour fair value gap. It is printed right here, and we can see that it is a pretty strong hourly fair value gap. We can see the volume right here. The indicator shows us that the volume is very bearish on this fair value gap, which is great. I also went on the 4 hour to see if we have any confluences over there. Bear in mind, the price was right here, and we can see we had a 4 hour fair value gap as well. And lastly, I went over the daily. Once again, bear in mind, in real time, we were up here. Once again, check this out, a daily fair value gap. So now that we had all of these confluences on point, also we can see the buy side liquidity, the indicator showing us as well that we sweat the buy side. After that, what I did is I hopped on the 5-minute time frame. I hopped on the 5-minute time frame knowing that I had very good confluences on the higher time frames. And now what I wanted to wait for is a bearish change of character. So let us play the price and see if we can get that bearish change of character. And check this out. Right here, we have our bearish change of character. We also have our liquidity grab right here. Okay, we can see the indicator is printing it as well. Change of character printed as well right here. And now I looked for a fair value gap. And check this out, guys. Let me play one more candle. Boom. This was the exact fair value gap that I used for my entry. Okay, I placed the stop loss above this high, which is right here. and then I targeted to RR, which was right on the opposite liquidity level. I also sent this trade in my community. I will attach a picture right now to see exactly when I send it. And now let's play the price and see how it played out. We can see that the TP was smashed right here. Now I will go over the second trade. This one was on NAS 100. Right here was exactly when I opened the chart on that specific day. And the first thing that I did is I marked the buy side and the sell side liquidity levels. The buy side was this one right here. The sell side was this one right here. Okay, it's a beautiful sweep. But if we play the price, we can see that price moved higher. And let me show you guys on the 5 minute, okay? On the 5 minute, I had no setups here, okay? So price moved higher on the 1 hour, and check this out. The indicator printed a liquidity sweep right here, a sweep of the buy side liquidity. And if we zoom out, we can see it as well. Let me show you guys where the buy side liquidity was. It was right here, okay? We swept these major highs with this push, and it was a beautiful H1 sweep. Why was it a beautiful H1 sweep? Because we can see that the hourly candle went higher than those two major liquidity levels, but it failed to close above it. And that for me is a great sign. That for me is a great higher time frame confluence. After that, I then hopped on the 5 minute, and on the 5 minute, I waited for the aggressive market structure shift, for the aggressive change of character. But what we can do here to make our life easier is we can go ahead and disable the bullish fair value gaps, basically color code them with white. Why? Because we only want to focus on the bearish fair value gaps, okay? Because we are looking for a bearish opportunity. So let's play the price on the 5 minute and see if we can get it. Check this out, guys. We have the change of character right here, okay? And we also have the fair value gap, okay, printed right here. This is exactly where I entered the setup. Stop loss was right above here. And the TP was at 1 to 2 as per usual. Once again, I'm gonna attach a picture on the screen to show you guys exactly when this setup was sent in my community as well. And on that note, if you guys like this style of trading and you would like to be part of our community, click the first link down below in order to apply for it. So now let's play the price and see how this setup played out. We can see that it had a beautiful reaction to that VVG, and the TP was smashed right here for another beautiful 2RR. And this is exactly, guys, how I am implementing these two key concepts in order to identify beautiful A+ setups like this one. And also you can see how helpful this tool can be, especially if you are at the start of your journey using these two concepts. Once again, if you would like to check out Flux charts and get access to these cool tools, it's the second link down below in the video description. On that note, guys, let me know down below if you enjoyed this video. Let me know what your favorite ICT concepts are. And of course, if there's any future video ideas you have, drop them down below. That will be very much appreciated. Share, like the video if you found it valuable. Make sure you're subscribed to not miss out on any future uploads. Until the next video, if you guys want to see a cool challenge where I day trade in my car for a full day to see how much money I can make sure to click this video right here. Lastly, wishing you all the best and take care.